Hello, everyone, and welcome to Smart Money Cult. This is episode one of a series that I want to call The Journey, wherein I want to share my experience with you all and maybe try imparting some knowledge. So, going to the first episode, I'm going to be talking about how you can read charts using smart money techniques, where you can potentially identify the big money footprints or the smart money footprints on chart. Understand that there are various ways to do this, and you can use whatever method you want, whatever method you like, but the basis on which you identify these footprints will be the same for everyone, correct? So let's get into the several ways of reading charts. I'm going to talk about the specific way that I like to do it, and just refining these techniques over the years, I've come to a conclusion that this is probably the easiest way that you can utilize to read the charts. So the first thing is structure, second is the order flow, and third is candlestick. It's as simple as that, right? It's as easy as it is. There's nothing else to it. Just keep this in your mind. You need a structure. Once you have the structure, you need to see the order flow. Once you have the order flow, you don't necessarily need to see the candlesticks. It's something that I don't take into account a lot of times, because it's way easier to just read the chart seeing the structure and order flow. So this is the primary basis on what I operate in the market and how I like to analyze my charts. So let's get started with this. Remember that price will behave the same on any given time frame. It doesn't matter what time frame you are looking at, it is all going to be the same. But just remember that the higher time frame, say the 1 hour, 2 hour, 4 hour, 10 hour, a day chart or a weekly chart or a monthly chart, is always going to have a heavier influence on the price and the way it behaves. And you'll slowly understand what I'm talking about. So the first part is structure. Let's cover structure. And you might have you might have read about structure, you might have understood about structure in a multitude of different ways. So let me just break it down for you. How you can identify a structure and what exactly is a structure. So when you all started out and when you started trading, what was the primary way of identifying a structure? It was just this, right? This is an uptrend, this is a downtrend, this is sideways or whatever. It's the same, it doesn't change. This, 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 this. It's the same, right? So let me just break it down for you. This is a structure for me. This is a structure for me. This is a structure for me. I don't see it like this. I like to see it this way. This is one structure for me. This is a structure. This is a structure. And what does this tell you? If you just use the ways that you've been taught, it's the same thing. So we're all doing the same thing. It's just about not overcomplicating things. And that's what we like to do here, right? So what is the structure? Structure is nothing but it's basically a swing. This is a swing, as you would like to call it. These are just your regular swing points. And how do you identify them? I don't think that anyone who's watching this video has any difficulty identifying swing points. So this is a basic structure. And what do you do after you identify a structure like this? You look for breaks. Okay, so let me just make it. So this is a structure, and you mark these areas, the highs and lows of your structure. Okay, so this is a high, this is a low. What do you think has happened in this? You clearly see the low being taken out, right? And this does not count. This is further in the liquidity chapter that we will not be discussing right now. But this does not count as a break of structure for me. This does. So what do you do after you identify your swing points? Your swing points are identified. Your break is identified. You know there's a clear break and price wants to move down. What is the third thing that you need to understand? That remember, when there's a break like this and the price is falling down, the price is taking out the lows and going deep in, you need to understand that the high is going to be a protected high. Why is it going to be a protected high? Because the smart money clearly does not want the order flow to shift above this. What is order flow? We'll get into it a little later, but the structure, let's just say the smart money, the operator does not want the structure to shift on the other side, which is why he's trying to break it on the lower side, right? It's as simple as that. There's nothing else to it. And what happens is, when you know that the delivery is bearish, this confirms your bias. This The structure is confirming that the market is trying to move down, and it is going to hold these highs. It's not necessary for it to hold these highs. That's how the market is. You just have to do your best to adapt to the market. You need a proper system, and so and so. So the structure, what the structure does for you, why it's so important, and why it's part of the episode one of the journey, is the structure is going to leave an operational range for you. Now let's just cut this out. Let's just make it fairly simple. Okay, I think there's a problem with this. Okay, let me just open a different chart. Yep. So let me just make it very simple. This is your operational range. It's what I like to call it. It's your operational range as a trader, as a swing trader, or whatever you are. So this is my current range. I know that my point of interests are going to be only within this range. It's not going to be this, or it's not going to be this, or anything at all. Why? Because this is what price has done. This is what price has done to deliver this, to break these lows, go down, form a bearish bias for myself. And if I have a bearish bias, I clearly know that these are my areas that I'm looking to take my shots off. Okay, that's again for a different video, but just to make you understand what an operational range is for a trader, this is an operational range. So just give me a second. Yeah. So this is your operational range. And what you have to do is, since we are on a higher time frame, it's going to take a while for the price to come back to your point of interest, right? And you have to understand what a kind of a trader you are, as we discussed in the live videos. This For this to happen, for it to come back to my point of interest, it took a total of 3 days, 21 hours. Now you need to understand that you have to give your range a good amount of time to mature. If you don't do that, you're going to be taking shots here, you're going to be taking shots here, you're going to be taking longs here. You will do all sort of things that you don't want to do, which is why this is primary. Always understand structure is always the primary part, and you should just let the structure play out. It's just going to make your life a lot easier. It is going to help you out in your journey. It's the primary thing. Just focus on structure first before moving on to order flow, which is what we're going to be discussing next. And to give you an idea about what order flow is, and I'm sure you guys understand what structure is right now based on what I just taught you. So order flow is the most important thing after structure. You can't just look at order flow without looking at structure. You need to know what the structure is doing before you look into the order flow. Because if you just look into this is just bearish order flow, right? All this is just bearish order flow. I can just look at the charts and be like, okay, this is a distribution. So it's clearly going to be bearish after this. It's going to fall down. All that doesn't matter. If you don't have a structural range, if you don't have an operational range, if you're not looking at the structure, order flow is of no importance at all. So order flow being the most important thing is going to make you understand where the orders are residing, correct? And when you know where the orders are residing, you also will have a certain idea about what the price is going to be delivering to, and what the price is going to target. And what I mean by that is, it will basically tell you that if I see a shift in order flow here, suppose this is my supply area, this entire area is my point of interest, and I see that the order flow here is bearish. Order flow in the sense is what, it when it comes to your point of interest, You have to switch down to your intermediary structure or the lower time frame or your whatever your operational time frame is. It is going to basically tell you what the smart money is thinking of doing or what the smart money is doing, because when so much of money is being moved in the market every single day or every single second or every single minute, it's not that difficult to understand what the order flow is doing, right? So you have to understand that when you formulate a bias, when if this is your bias, I'm already bearish on euro USD, and it breaks the structure, and when it's coming back to my POI, that is where I look for order flow. I don't look for order flows in random areas. Order flow is nothing but it's just structure. You shift it to an intermediary form or a smaller time frame where it becomes clear to you. You all know that you can't be trading this. It's just what retail does, right? You can't trade something like this. But on the other hand, if you just mark this area, this is always a better trade than the other one. So so that's what structure. So you have to combine structure and order flow together. You can't just use structure to trade, then you're going to be caught up in all these huge trades and huge ranges where you'll have to wait for days to get your setup or days for your trade to work out. So what you do is you combine structure with order flow. And what that basically means is it's going to give you a distinct advantage and deeper understanding of where price is willing to head or where the price potentially wants to head. Again, you have to keep in mind that order flow will not always determine the direction, or it will determine whether the structure is going to hold or not. This is where trade management comes into picture, which again we're not discussing right now. But you have to just basically understand that your point of interest are your areas that you should be taking trades of, not anywhere else. And once you have your structure laid out, you have your range marked out, you see a shift in order flow here, you know your bearish bias is in play. You know the market is going to take it down, and just start taking trades of that. So what is the shift in order flow? Okay, let's get to that. Let me draw it out plain and simple. If this is my operational range and this is my point of interest, this has happened on the higher time frame. Now we all clearly know that, just say it's something like this, right? We all know, like I discussed in my live videos, we all know that this is a higher time frame and there is some sort of this happening in the lower time frame. This. Now what is this? You zoom in. It's not just a straight line like it looks like on the higher time frame. You see, there's a break here again. It's pretty evident. There's a break here. What does that want to tell you? That price wants to head lower. And why would this be a good trade for you? See, your structures lined up, your bias is correct. It's all happening according to your bias. What do you see? On your operational time frame, you see a shift in order flow. What is a shift in order flow? It's nothing. People call it change of character. You can call it whatever you want. This, once these lows are taken, I know that maybe once it comes back to the zone, I can take shots of that. What does that mean? It's the same thing. It's repeating the same thing over and over again. I mark my structure in the intermediary zone here. I look for the break of that structure. I mark my POI just on a smaller time frame. Once I'm done doing that, what do I do? Once this area breaks, it forms a potential POI for me. It comes back to the POI. I start taking it down. What does that result in? That results in a much better accuracy for me, precision, and isn't that what we want as traders? It's exactly what we want. So order flow is nothing but a shift, a shift in the flow of orders. And for example, like I told you, if price taps your POI and you see a change in order flow, if you see a change in order flow, you know it's breaking down. When it comes back up, You can just take it down. It's as simple as that. Nothing, it's absolutely nothing else to it. What order flow is going to do when you analyze is it is going to help you. It is going to help you play your bias. And like they say, you plan a trade and you trade your plan, right? So this is basically it. This is just part two of what you need to understand. And it takes a while for you to understand what is happening, why the price is doing this, why the price is breaking down, why the order flow is shifting. But you have to understand that your eyes have to see this naturally. And since this is exactly what you need at your areas of interest in order to form your criteria where you take your entries from, it's going to be the most important thing for you, for a day trader, for a swing trader, or anything else. Okay, so we have covered order flow in short. I hope it was clear to you. And we are moving on to candlesticks. And candlesticks is something that I personally don't like to focus a lot on, since structure and order flow just covers it all for me basically. And apart from structure and order flow, I like to use Wyckoff in my personal entry criteria and system. So as I already have a system and criteria in place, candlesticks will only help me with the volume of orders that are put in place, where it enables me to basically see the data and see the activity that is happening on a certain time frame. So sometimes you might have noticed that you can just use volume charts if you're comfortable doing that. I sometimes like using volume charts on several pairs or indices. But what does it tell you? This for basically this candle, this reverse pin bar or whatever it's called. What does this tell you? That a lot of orders have been pushed in. A lot of orders have been pushed in here. So I know there's a good amount of volume coming in here. There's a good amount of volume coming in here. And what does this basically mean on any given time frame? This area and this area. What is this? This is a demand zone and this is a supply zone. What does it tell you in simple words, or just looking at the charts like a layman? What does it tell you? That obviously the selling pressure is higher than the buying pressure here. What are you expecting it to do? Go down. See, it's not going to be the same all the time. This is not going to work out all the time, which I'm going to cover right now. So candlesticks will only come into consideration when the structure and order flow is identified. Do not go for candlesticks. Do not go for candlestick identification or candlestick analysis before you have all of this in place. If you don't have structure and order flow in place, then this just cancel this out for yourself. It's probably of no use. You can't take a trade like this. And even if you do win, I don't think it's going to be something that you'll be proud of when you know what you could have done instead of just doing that. So simply because you see a pin bar at a demand zone or a supply zone does not mean that demand or supply is going to hold and that the price is going to reverse from there. It could happen. I'm not saying it's not going to happen, but if you notice, there will be times where you suppose you see such a thing, you take a trade, and what does price do next? It comes down. You're very happy, you're in profit. It's going to liquidate you. As simple as that. So this candlestick is not going to mean anything. Absolutely nothing. And also try understanding that there are people who only trade based on candlesticks. But what they fail to realize is that every wick, like I just explained, every wick, this is a supply zone and this is a demand zone. And like I told you, if you're going to trade just based on candlesticks, what are you going to do? You're going to do something like this. Okay, going to do this. What is this? What is this area? Oh, sorry. What is this area? This is your stop loss. And do you think the smart money is stupid enough to not know that your stop losses are residing here? Of course they know everything. This that's what's going to happen. You're going to get liquidated. So a lot of people who just trade based on candlesticks without knowing the actual pattern or actual structure of what price is doing or where the price is headed are going to get liquidated like this. So understand that most of the stop losses will always reside in such areas. That's again a liquidity concept which I don't want to touch right now. But the way of reading charts and the way of going about it is as simple as this. I don't like putting in too much complicated stuff when I'm reading my charts. So I'll tell you what my typical analysis looks like. Okay, let's just get rid of everything that we have right here and we'll just read. We'll just read the charts the way I normally tune into charts. Maybe to give you guys an insight of what it actually looks like when you're doing it live. Okay, simple words, simple: bearish, 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 bearish. Okay, we're holding bearish ranges. The range is still bearish. This is my last bearish range, correct? Formed a very good move down there, took all the liquidity off these lows. Obviously, liquidity is again all the stop losses that were there here. What is my point of interest? Say this area. I'm not going to refine anything. So this area is my point of interest. Okay. And you need to understand that if this is my point of interest and if this is a structure that I'm drawing out, what does it mean? This. Understand that at every swing is always going to be something like this. Correct? There's always going to be this at every swing. This is how the banks, the institutions, the smart money, or let's call them the dumb money, this is how they trade. I mean, this is literally how they trade. And why do you think this move came up to be this one? This move up here, that's obviously just stop loss is getting triggered. There's nothing else. The range is still holding. This entire range is still holding, and the price delivery and the order flow is still bearish. So I'm still bearish on Euro USD. So this is the 1 hour time frame that we're looking at. What I do is I typically go on the weekly just to create a story for myself and I know where I am on the charts. Okay, so I know this was a weekly demand. I know there's a weekly demand here, and if you can see, there's clear absorption here at the weekly demand, and the weekly demand is playing out nice. It's still bearish. That doesn't mean you should just go on and buy the weekly chart and just expect this to happen. It's probably going to happen. It's probably not going to happen. You never know. You just need your confirmations for that. Go on a weekly, go on daily. So I know my daily is bearish. Okay, it's in a very big range. And when do I switch bullish? I switch bullish after these highs are taken. Like we spoke about in structure, these are the highs that the institutions are protecting. Once these highs are taken out properly, we can expect a lot of bullishness, but that is on the daily chart. And I, for once, don't operate on daily charts. I will show you how I operate. Then I move on to the hourly charts, I mean the 4 hour charts, still bearish. Price delivery is bearish. Okay, nothing here, still bearish. Go on 1 hour, which we just discussed, again bearish. Now, when I'm switching from weekly, daily to 8 hours to 4 hours to 1 hour, in the back of my mind, I know that Euro USD is at a weekly demand and it is not liquidating the demand. So I already know in my head what price is doing on the higher time frame, which you always have to keep in mind because it's going to influence your lower time frame in some way or the other. You have to remember the higher time frame story, then the lower time frame story before you jump into your operational time frame. And again, 1 hour time frame is not the time frame that I operate on in the markets. It's as simple as that. I go to the 15 minute, I see what the charts look like on the 15 minutes. I already know that this bearish range is holding, so I'm all ready to take shots. This is one range, this is my other range, this, and you just had beautiful shots from this entire range. Anyway, leaving that aside, and this again is an entire range. You can see you could have got a beautiful shot here. So I go on the 15 minute. I see what the structure is doing. I know the delivery right now. See, this is a shift in order flow. If you see, if that was my point of interest, and if I zoom in here, you can clearly see that this shift in order flow is the same that we were talking about just a bit ago. This break, this is on a 15-minute. Obviously, you can jump on a smaller time frame to take tighter entries, but this this is what this is all chain in order flow. And what does chain in order flow do? When you're at your POI, you have you have to not think twice. You just have to go for it and execute this like a machine. Take shots from this area, just down there. And of course, you're not going to be directly targeting this. You partial on the way and just clear everything out. So that's how I like to formulate my bias. Then I jump on the 1 minute. I see 1 minute operational time frame is huge. So this is my point of interest. This is my point of interest. Then this is my point of interest. Now, once it breaks down this structure and comes back down, I can take. I'm expecting this. I'm expecting this. I'm expecting this. Now, when it comes to my POIs, I look for a change in order flow, which again, Wyckoff. I look for distributions around these areas and I take it down. My entries are based on 5 seconds, so I'm not going to be discussing that in this video, but just understand that it's fairly very simple. You just have to get rid of all the FOMO that you have. And as you can see, this is a change in overall order flow. If you can see here, this is Wyckoff, and some people like to see a sign of strength, take out the automatic rally right here, and then go for longs, which is what I did around these areas. So this was operating in a very nice range here. The structure was taken up, order flow was shifting, and the same thing that I discussed around here applies to this. This is my structure. I was looking to take trades of these areas, but it hit the first POI that I was looking at. What did I do after it hit my first POI? I'm just drawing this out to simply put it like this. Here. That's how you analyze, that's how you trade. And just without taking any confirmations or just taking a risk entry right here, you could have done something like this. Or maybe this. This depends on you. So what I want you to understand is smart money is not magical. It's not anything different from what you already do. It's different from what you already understand. And I'm sure for most of you, this might have been an eye opener. But remember that this is just scratching the surface of what this journey has to offer to you. And if you practice working your way through reading charts like this, you're going to see a lot of new opportunities open up your way when you see the charts and when you want to trade. So I just want to tell you one thing, that just get rid of all the FOMO that you have, because when you zoom out, which is your biggest strength in the market, just zooming out, you know that you're going to be finding trades every now and then. And you absolutely have nothing to worry about when you have these three things in place, which is going to help you formulate a bias and analyze charts fairly simply without putting in too much of complications. And that's how you formulate a trading plan. And this is what I wanted to discuss with you guys in today's video, and I hope it was insightful. I'll be back with an episode 2 of the journey, and we'll see what we can do in there. So see you guys until then.